All right, it is Tuesday, November 4th, 2025. Income Navigator live trading session for the day. We'll go about an hour or so in today's session. Cover a little bit of whatever you want to make sure gets covered. If not, I will definitely cover some things. But again, the goal today is let's see what trade opportunities are out there. We've actually got some good trades on, running pretty well right now. Markets are red on the day. Not terrible, 0.8 of a percentage points, but let's just jump in. Let's look at charts, see what we can get going. All right. Make sure we're sharing the right things. There you go. Let me get off the screen. Don't need to see me. As long as you can hear me, that's great. Rock and roll. Let's get into it. And we're just going to use the daily charts today. We could switch back and forth, daily, weekly, whatever you want to do. But let's take a quick look. So here's where we are. We've had a nice pullback for probably the last 5 trading sessions. I mean, yesterday was an up day, but not really a convincing up day. Volume was not anything special yesterday as a whole. If you're watching, RSI is falling. If you're watching, MACD is rolling over. And if you're watching, we fired a squeeze long. And you can see you see this far candle today. So we got 1, 2, 3, 4, 5, 6, 7, 8. Typical squeeze lasts about 8 bars. Look at what's happening with this last bar. It's flirting with turning into the dark blue, which means you're starting to run to the end of the line on this current up move that we've had. So it might be an opportunity for the markets to pull back. Let's see what happens on ES here. We've pulled back to the 8-day moving average. We broke the 21 briefly this morning, and we're still above that on ES on the day. Would not be surprised to see us break below that. We may come down, test the 50-day. Who knows? If we do, I think that would be a good opportunity. That would trigger a bearish PSAR signal as well. So you got, MACD still above 50, or I'm sorry, RSI still above 50, but falling. You still have a bullish PSAR right now. You still have the 8 above the 21, and you're still above the 21. So technically today, all systems are still green and go for us. So still bullish in here. So there's no reason to run for the hills on today's candle. Again, it's not a very big candle. We're down not even a 1% day so far today. But we have definitely moved off of our lows. Now, can we still hit the lows of the day? Absolutely. So what would I be doing in here? If we're looking, I'm bullish, which means let's take a look at even bullish on this pullback. I think is bullish with an opportunity. So on ES, I think 112s here are a great setup for 112s. I also think a strangle on ES is not a bad setup here either. You've also got RSI right in that 53 zone. So this is and you're right near the 21-day moving average. So if we can get between the 21 and the 50, anywhere in this gap in the next day or two, I think it'll even be better. But I like the strangle opportunity. I still think we go higher. I still think we hit 7,000 in the near term. Tom Lee's putting us at 7,500 by the end of the year. I'll buy that as well. So I still think we can go higher into year end. We did not have the reset in September or October that everybody was thinking was going to happen. We just continue to plow our way higher. So maybe we'll get a little bit of that pullback here this week, next week, and then clear our way for the end of the year run. Either way, I still think we run higher into the end of the year. I think a lot of institutions are not in the right picks. They don't have the right tech stocks that have been great all year on their balance sheets. The institutions did not buy this rally. Retailers did, but institutions did not, which means I think they got to put money into some of these big names, the Amazons, the Teslas, the Nvidias, the Googles. I think you got to have those on your balance sheet by the end of the year. So if you didn't like this rally and you sat on the sidelines like most institutions did, that money's got to come in before the end of the year. And I think you're going to see some things moving higher. But 112 and Strangles, again, those are opinions. Trade what you see. And what I see right now is a nice pullback, giving us an opportunity to get into some more trades, 112s and Strangles on ES. Let's keep going here. Again, my opinion does not matter. What does matter here is simply what you see in the charts. And Igor and I do cover these things with you guys. So we're still in this downtrend on oil, but it's pretty flat and been pretty sideways. I see no catalyst to drive oil significantly higher. I see no catalyst for oil to fall hard in here, although I do think demand is waning, but trade what you see, right? And what do you see right now? Well, you see us sitting right at the 21-day moving average. You see the 8 coming up and getting ready to potentially even cross the 21 if we get an up day or two. You can see squeeze, launching a little bit to the upside down here as well, even though RSI is falling back to 50. I think it's just a perfect strangle opportunity. We're in it. If you're not, I think this is an opportunity, not financial advice. Obviously, do your own research and find those things that make sense for you. But I'm looking at strangles. Now, I just did add another strangle 5 days ago. So last week, I added a strangle. That thing's up 16% now in 5 days. I'm still in a jade lizard. That's up 50% right now. Kieran, if I'm saying that right. If I'm not saying it right, let me know. But regular 112 or FBBA on ES. I think the regular 112 is a great setup. I also think that the BA 112 at these levels is a really good setup as well. And I just did that on ES. And we modeled that thing for you guys last week, but I did put on a second BA 112. That thing's up now 7% here. So this one in 5 days. So I can't be too upset on that thing. 7% in 5 days, and the other BA 112 is up 158% in 41 days. So two of them on. It's kind of my max. I don't want to have any more naked puts on ES than I have to. But I think those have been great trades up here, the BA 112s on ES at these heights. All right, so oil, good strangle setup in my opinion for oil. If we come down further into this, into the 50s again, then I think you can start to look at naked puts or 112s or something on that. Wait for the pullback if you get one. If not, strangle it. All right, gold. It's been a great pullback on gold. Now we're down here along this white line is the anchored VWAP. So we've touched on it once. I think this anchored VWAP in the 50-day bottom of the Bollinger Band, I think this is a great area for gold. Gold pulling back today, I still think this sets up well. Now, the 8 is above the 21, check, but you're in a bearish PSAR and you are below the 21. Okay, so there's 2 bearish signals, 1 bullish signal, and then RSI below 50 and falling. So 3 bearish signals to 1 bullish, and I'm guessing that this 8, if we keep dropping or whatever here, the 8 may cross the 21. So you're going to get into a little bit more of a bearish scenario on gold. I still think long term, this thing's in good shape. But look, you've got the squeeze. You're now 4 candles in. To the squeeze, firing to the downside. Okay, so that is also something to keep an eye on. If we get to 8, then I'll be watching it, or if we can bounce off of this anchored VWAP or 50. I think gold sets up, especially if the market starts to falter a bit. Today, you've got the gold falling with the market, which is a little unusual. But what would you trade in gold? I think right now, gold sets up as a strangle. So I do like gold as a strangle. I actually have 3 trades going in gold right now. I have a strangle. It's up 25% in 5 days. I have a 112 that is up 66% in 13 days. And I have a BA 111 that's up 126% in 26 days. Because that was a great trade when you're overextended here. The BA 111 or 112 was a great trade. We're now up 134%, and we ain't done yet on that thing. So we could actually go significantly further as long as gold kind of just meanders around in this pinched area here. We'll keep an eye on the anchored VWAP to the upside as well from this previous pivot high, from this previous pivot low. You're in this pinch area. So you're in this VWAP pinch. You could maintain this area for a bit of time. It's not like all out gold, uh, get out of it or anything like that here. I think the strangle is good. I think the BA 112 is not bad, but I still think in gold's very hard to put a 112 on, but I don't think this is a bad spot for that. I think it's a good opportunity. All right, so you look at bonds quickly. Bonds, same type of thing. Let's actually throw a anchored VWAP on, I don't know which, I guess we'll use this. Okay. If I moved it, same thing. So, all right, so the anchored VWAP on bonds, you can see that we're right at it right now. So we're trying to hold on to this anchored VWAP area along with the 50 near the bottom of the Bollinger Band. You've got MACD falling. Okay, squeeze has, the run on squeeze 8 days in started to roll over. You got the blue bar, dark blue bars. Okay, that's all great. So we saw the pull down coming on bonds, and I still think right now bonds set up TLT, ZB, whatever you want. Right now, it's still a great strangle opportunity, in my opinion. If you want to sell naked puts on this pullback in bonds, I don't think that's a bad strategy either. I got to apologize if I don't know the answer to this question, but if Igor is still in the covered strangle on TLT, that's what I would also be looking at. If you're not in one, I think this is a really great setup for bonds. So if you're not in it, I'd be selling naked puts to either get into it, or I believe Igor actually goes in with a strangle to begin with. But I'd be looking at that trade of his. I'd be looking at a covered strangle in TLT. I think this is a beautiful setup right here when you have a strangle on bonds, which I think do drift higher through the year, but I do think rates are hitting some lows and potentially bouncing a little bit off their lows, which is going to constrain bonds a bit. So I just think we get more of the same sideways. That covered strangle has to be absolutely just printing cash. So if you're not in it, check out what Igor's doing on the covered strangle over in the Discord. I had one on, took it off for profit. I think this is another area down at this level that you could potentially look to get in. All right, there's pretty much my core four futures. That's where I would be placing probably, for me, 70 to 80% of all of my trades should be in the trading account, which I believe it's probably even more than that. But right now, if I look at my allocation, 20% is in ES. I've got another 15% in gold. I've got 4% in bonds. I've got 3% in oil. All right. So if you take a look at just those futures right now, what is that? 42% is just in those futures alone. And then I have indexes and some other things, but the majority of what I'm doing is in those futures trades. So I think I would like to have it actually a little bit higher, but I've got a lot of QQQ, SPY, strategy, and Broadcom and gold for the income format covered calls. So I'm right there with the trade setups and strategies that I want to run. Let's jump into a couple quick stocks for you. Amazon, love this stock, one of my favorites. I just think you got to wait now. It's run. If you got in here, which we did, I'm long. I added more leaps to this thing. So I'm pretty heavy in Amazon. It's one of my largest positions in the Lazy Trader account. If I look at those, UNH is my number one. Tesla is my number two. TLT is my number three. And then Meta and Amazon are right there. So it gives you a little bit of an idea on the Lazy Trader account, how I have that set up. I just think this is not the time for Amazon. We got in at the right time. We got in before earnings. It took off. I think now you have to wait for the better opportunities to get in. Nvidia, you got earnings coming up, not too far off here on the 19th of November. Wednesday. So until then, I'm not sure I want to do anything in this. It's had a great run up recently. I think you got to wait. When you get down to this 50-day, this continues to be a buying opportunity. So don't chase the stocks. Quick question from Karen as well. 6A, 6E. If you're trading Forex here, I don't love it. Here, if we're watching the US dollar, so I think that's where you got to focus. US dollar is absolutely running right now, okay, which does not bode well for Forex, which means 6A, 6E are going to be dropping with the dollar showing some strength in here. It does not set up. It's not near the 200, it's not near the 21. It's not really in the middle of the range. And you're at 40, which is kind of the no-go range for me on a strangle. So 6A would not be for me. And if I look at 6A, 6E, which is the euro, looks even worse. This thing's down at the 30 on the RSI and way below its 21 and 50. I don't like either one of these things. I wouldn't probably touch either one right now. I don't like the looks of any of those. You could also potentially take a look here at small caps RTY. I don't cover it very often. It's having a pretty good pullback day here today. Since the Fed decided they may not cut, small caps have eased a bit, but they'll start cutting again by January. So small caps, this might be your opportunity. I think I would just be chilling on the beach right now. All right, let's look at Tesla. I like Tesla. We talked about it last week. It's been in this sideways consolidation range. The volatility box, as Don Kaufman would call it, even though I think Don Kaufman is wrong 90% of the time and seems to be just only a perma bear anymore. This is absolutely a value range here. So you're looking at this value area. Super consolidation started to break out yesterday on decent volume, not fantastic, but decent volume. Pulling back into it today, which has kind of been the pattern. It can't seem to get 2 consecutive days outside this box, but it looks good. You got a squeeze firing, maybe to the upside. Bullish PSAR, 8 above the 21, stock above the 21, RSI above 50, squeeze firing. Well, I think Tesla is one of the best looking opportunities in here to get in. If it comes down to this 50, I absolutely think that would be a great deal. So you're getting a nice pullback back into the box here. We just need a definitive break. All right, Meta, 3-day rule, okay, is now over with. Okay, and there's still no signs of this thing stopping going down. I think it goes further. You might hit 600 on Meta before it stops. Okay, if you got in here, wrong. If you got in here, wrong. If you got in here, wrong. If you got in today, probably wrong. Okay, does this thing look like it's done going down? What about Meta gives you any sense that a bottom is in? Okay. The fact that today's green, well, it's green because it's off of its lows, but it's still a gap down day. It's still down another 1%, another 5 points today. So if you jumped in right away here at 668, 670, okay, well, you're now at 632. So you've given up another 40 points because you couldn't contain yourself. Okay. You got to have discipline and you got to have some patience. Don't be the first one to buy the stupid dip. Okay. Wait until you see the bottom. Okay. Now, I did talk about the fact that volume has been dropping on this sell-off, okay, which is probably a good sign. Okay. But RSI is not curling up at all. Okay. Squeeze has actually triggered a downside selling signal. So we're not 2 days, 3 days into the squeeze. Okay. Eight and is dropping below the 21 at a rapid rate. Of course, it's going to because it's down here. Nothing good happens below the 200 day. You can write that down as another uh, rule that nothing good happens below the 200-day moving average. I don't like it. I'm not getting into it. I'm in. I don't love it. Okay. I'm not going to start selling covered calls because if this thing reverses here, we could get a V-shaped bounce at some point. So I don't want to write covered calls on it. I don't like to average down on it necessarily, although leaps are a little bit different than standard trades. I don't see any reason to get in. Now, if tomorrow we get an up day, okay, then okay, maybe we'll start to think about it. And if the next day's an up day, but you haven't gotten any confirmation that any sort of selling is done. And I really think that 600 could be something to look at. And over here is a gap. Let's, okay. There's the gap, all right, from back uh, in May. And then below that is another unfilled gap. Okay. So, okay. So two gaps on Meta. I definitely think this gap might get filled. So I'm not going to tell you what to do. Okay. You got to decide what's right for you. What's your trade plan say when you get for getting into trades? Did it say, well, buy the dip? Okay. Or does it say, look for something that's reversing or heading higher? Well, you don't have any of those. I don't have MACD reversing, squeeze is not reversing, RSI is not reversing. Okay. It looks pretty poopy to me here. And you've got a gap here and another gap below. Don't be first to get slaughtered. Here's all I'm saying. All right, let's keep moving. Uh, Apple looks fine. Nice little pullback. This thing's marching along. Good earnings. It's pretty consistent, but squeeze getting long in the tooth. MACD rolling over. It's a little overbought right here. Wouldn't be surprised if it pulls back a little bit, but it's the only thing keeping the market, slightly elevated today. Google looks fantastic. We called it back here on this bull flag. If you're in, great. If you're not, I don't think that this is the spot to get in. The squeeze is getting long in the tooth. 2, 4, 6, 8, 9 days. Okay, that's actually 1 day longer than the average. MACD starting to roll over. You're overbought. This would not be the spot to be getting into Google right now. Let's see what happens if this thing settles down. If it comes down anywhere near this 50, I think I'm going to be seriously looking at Google as a trade. Okay. Microsoft, it's not my favorite. It looks terrible. There's nothing here redeeming on this thing. It's sideways. It doesn't look great. I don't love the company to begin with. MACD looks bad. Squeeze not doing a whole lot of anything here. RSI is falling. I see no redeeming value in Microsoft for me. I'm not entering it. All right, Palantir, nice gap down here right after earnings. So had good earnings, okay, which was expected, okay, but it's stupidly overvalued. So it's going to come down here. This was the box that it was in previously. And now we've got a gap to fill to the upside, which is fine. We've got gaps to fill on the downside all over the place here. Uh, let it chill. Okay. I think this thing could also potentially chill out. I don't think I'd be in a hurry on this at all. All right, so we got earnings coming out Wednesday, tomorrow on this thing. On Hood, I like Hood. I think we'll be fine on the earnings side of things. It's just there's nothing to do right now. If you're in it, great. I'm in it. I'm holding. Okay. Netflix, trying to find a base here. Okay. This is why, again, don't buy the gap because boom, it went down, 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 down. Started to reverse a bit. Okay. And then gave up some more. Okay. But not, you've got MACD reversing, RSI trying to reverse. I wouldn't fault you if you had gotten in here because you had 5 days of maybe consolidation, started to tweak higher. and then RSI. But your squeeze is getting long. I think this is getting to a spot. If you like Netflix, you're fine to get in. All right, AVGO Broadcom, we're in this thing for an income poor man covered call, which means we are absolutely not afraid of this thing pulling back. Right now, in fact, it'll be a trade that we'll look at today because we're 76% up on our covered call, which was an at the money covered call, up 76% in 4 days. I think we'll take the profits on that thing at 76 today, and we're going to roll. We're still going to roll back to at the money because we're still 8 above the 21, but things are starting to weaken on this pullback. If you're not in this one, just be patient because I think you're going to get an opportunity on it. I like SoFi. SoFi is holding up really, really well here. We're in this thing, or I should say I don't know where I'm saying we, but I'm in this thing nicely here. I don't think this is a bad spot. SoFi is pulled back, good earnings. Love this company. I think it's heading near term 40, next year 60. I think SoFi continues to perform well. I think this is a great poor man covered call opportunity, not income poor man covered call, but a poor man covered call opportunity. I want this thing for appreciation. This is a nice spot in here off these 21 days moving averages. It's not a bad spot to be selling naked puts, maybe somewhere around here. So if I was looking, I'd say SoFi naked puts would be an opportunity. And I'd also say potentially, Tesla naked puts of the stocks. Other than that, let's get on to some trades. But Uber, pretty big pullback on here. Nice earnings beat, okay, and a drop on the earnings beat. Okay, I think this is back into the bottom of this range, off of its lows for the day. I think this is the opportunity on Uber to get into some leaps. If I wasn't in, I'd probably be looking at that today. But the gap is down, so let's give it a couple days and see what the next 2 or 3 days look like. We might reverse quickly higher. I think it's an overdone sell-off. Okay. Boeing, I think this is not a bad stock in here, but right now, gap down. Started to try to reverse, didn't do it. None of the indicators are giving me any reversal signals, so nothing for me. We got ARM earnings coming up, so I'm not trading that. NNE down a bit today, hanging right at the anchored VWAP, right at this trend line, give or take, a couple points or so in here. Things are starting to reverse to the upside on the squeeze, but not MACD or RSI. So let it chill for a bit, and then we'll see what happens on NNE. One of my more recent favorites that's out there. Bull, this thing just cannot get anything going. I'm probably done chasing this thing for a while. It looks like it's trying to reverse. It's oversold here. At some point here, it's going to make the move. I'm just in it for now for a bit. I do like it. Oscar starting to put in a bottom, but all of this stuff is getting hammered with this government shutdown and the Affordable Care Act stuff. That's starting to jump in here. This is why some of these things are down a bit. I think all of this is opportunity. Okay, earnings is coming up, so wouldn't jump in right before earnings. But I like Oscar and I do like UNH. I think this pullback, which is almost the gap, we could fill the gap, but I don't think it's bad. Okay, we're getting some selling here. Oops, I don't know why this thing did what it did. Can we fix it? Okay. But you've got MACD still falling, squeeze triggered to the downside here, RSI falling, UNH right now. I would just wait a little bit, but it's given me some more opportunities to get in. I still think this thing goes higher. All right, and then Bitcoin getting beat up heavily. You're getting some rotation out of Bitcoin into some equities and things. I think it's fine. I think this is a good shakeout for Bitcoin. I think this will end up being a pretty good setup for Bitcoin and strategy, but neither one of them is a buy right now, and Ethereum doesn't look so hot either. Right? So right now, no sense jumping in on it if you're not already in. All right, there's a bunch of trade opportunities. All right, Costco really quickly. Let's hit it. Okay. Costco. Okay. I think this is potentially a double bottom in here. Okay. I don't know if I drew this thing perfectly where, what it should be, but I think you're looking at a pretty good double bottom opportunity in Costco. It's heading towards this downtrend line. You've got the 8 heading up to the 21. You've broken the 21. RSI is heading higher. MACD's reversing. Squeeze. Triggered to the downside a bit. I wouldn't be rushing into it, but I certainly would think that maybe this bottom end holds here. Uh, we'll see on it. All right, so there's my take. Oh, and then CoreWeave, we got earnings coming up. Pretty good gap down with everything else today. Anything that's been a big mover is getting beat up a bit out there. All right, there you have it. We're still, heading a little bit lower on ES on the session. Let's jump into putting on some trades that we talked about here and give some trade ideas and see if there's anything we have to make any adjustments on. Okay, so I will jump into the Income Navigator account. We'll quickly review our oil trades. They're all up. They're all doing great. They're both up today. Strangle, J Lizard looks good. Strangle trade was a possibility today. So if you're not in it, if I was trading it, I'd head out somewhere close to 90 days, which 71's close, 105. I might take the 71 just because it's a little bit shorter time frame. If I was putting something on today, maybe again 7 delta, roughly 6 delta, something along these lines. Hmm. So if I was looking at a strangle in oil, this is what I'd be strangling. That's what I'd be looking at. You got a little bit of upside skew, which is totally fine. But this thing sets up really, really nicely here as a trade opportunity. Taking in $600 using only 1,900 in margin, over 25%. I think that's a uh, pretty good sign. Hang on for a second, and let's post these in Discord. So under Tom's resources, there's Tom's trade ideas. I keep popping trade ideas in there for you. And I'm going to put this one in here. So this is the CL Strangle. Okay. And boom, that one's in there as a potential trade idea. So if I wasn't in, that's what I would be considering. Since I'm already in 2 trades here on oil, I'm not going to add anything else. If there's something you want me to model, please pop it into the chat here and we'll take a look. All right, ES. All right, we got a BA 112. This thing's up, like I said, 158%. I think that's a fantastic trade. We've got a naked put here that's up 83%. And it's off just a fraction today. So nothing to worry about here. This should still come off in the next couple days. We got another naked put here up about 60%. So those are great. Nothing to do there. And then we've got another BA 112 that we just added 5 days ago. So this one's in good shape. Right now, it's up about 2% right now, just up fractionally. I would consider putting on a new BA 112 here. And then I've got a naked put up 30%, another one up down here, down 18% that I just put on yesterday. I really wanted to hold off until today since yesterday was an up day and I really didn't trust it, but you just got to trade your plan. So I don't want to try to time the markets, and I don't think timing the legs and any of that is worthwhile, right? But if I was trading ES in here, things I would put on, again, a 112 trade, I think is not bad. If we go out, this 59-day does not have good strikes. So we'll go out 57 days. If I was putting on kind of a standard 112, it'd be something along these lines. I could frankly go down here. Okay. So if I was just putting on just a basic 112 trade, Gotta do better, Tasty. All right. So if I was putting on a basic standard 112, this would be it. So if you want to put on a 112, you can make 1,860 bucks in the tail using $13,000 in margin. That's over 10% in 57 days. And you can go all the way down to 5,900, which is almost 1,000 points down from here. And VIX today, okay, up to 18, a whole whopping 1874, but it is elevated, which does give us a little more juice as premium sellers. Okay. I'm not going to hold out for high IV rank. I've covered that 8, 9 million times. Why I don't think that matters, but I think this is not a bad trade at all. You're getting a pretty good return. So this would be an ES 112 trade. I think that sets up pretty nicely. Now, what else can we do with this trade? Well, we could turn it into a BA 112, which would be drag this all the way down till I have almost no money. You know what? We're going to stop right around $9, $10. Okay. And take a look at this thing. Let me make this screen a little bigger. Hopefully this is helpful. You guys find some value in what we're doing here. But you can see this, and again, we don't care about VIX or VXX or any of that nonsense. I just wanted to point it out. But let's get down here a bit so we can see the whole trade. You can make 475 bucks in the tail. So $475 in the tail using 75.52 in margin. This gives you a 6% return in 57 days. Okay, it's not the same, as the one we just, did, which was going to make you $1,800 on a lot more money. But this one, I think, sets up fantastic. Okay, this is a pretty good BA 112. You're going to make, and if you fall into the trap here, almost $3,000 on 75.52. That's a 39% return if we drop it all into this area. So I think this BA sets up really well here. Okay. So that would be my ESBA 112 trade. So there's two different trades. I really like this one. Okay. I still think, and if you wanted to, the standard 112 was using about 13,000 in margin. Okay. If we doubled the size of this one, okay, we're not making the same return because that, the other one was returning, what was it? Like 1890, I believe, like 1860. So 1860 using 13,480. Okay, you were making almost 14% on the 112. But this one, you're still making 6%, and you've got a giant downside trap. Okay. And I think that certainly gives you an opportunity if you want to juice this thing up a little bit more. Let's go back to the original quantity. You could widen these, okay, which means, yeah, I'm only going to take in 283 bucks, okay, on 72.48. Okay, so it's only making 4%. Well, 4% in 57 days, not terrible. It's not the worst thing in the world. Okay, but man, if we slide down in here, you got a really big trap. Okay, so this thing being 75 wide instead of 50 wide. You could also, what the heck did I just do? Okay. All right, let's go here and. Okay, we're going to leave this at 50, but I moved the put debit spread up. So I'm taking in a little less cash, still making really good amounts. And let's slide it up even more. We'll stay 50 wide. Okay, this one, I'm taking in 420 bucks on 75.51. So this is making 5.6% return in the tail, which is great. But we've also moved this up substantially so that if we enter this trap earlier, or even if we're near the mouth of the trap, this is T+0 line is going to lift, and we're going to get the benefits of this trap, even if we're not in it as time decays for us. So there's at least some additional opportunities there for you. So you can do anything with these. And then if you really don't care about money and you want something, again, this is not a perfect hedge because a perfect hedge would be something, which I don't know if there is such a thing, but a perfect hedge would be something you pay money for, not take in money for. But in this case, we make almost no money in the tail, but you're only using buying power. So if you've got buying power to kill and you want to put on something that could really pay off if we drop and we're going to make no money in this tail, but now you've got all the way down here to 47.50. So you've got a really long, long trap here. So there's all kinds of stuff that you can do. I'm kind of partial to trying to get around 10 bucks for these so I can make around 500 bucks here on around $7,000 in margin. I think that sets up pretty well. You could also, let's keep going. You could also do the at the money 111. So let's see what that's going to look like. Okay. So here's an at the money 111. What's the difference here? Uh, the difference here is we're still going to make, now this is a 111, so you have less naked puts here, which is going to give you a little bit, it's going to lower your overall Vega, because if this was a 112, okay, my Vega would go from 200 and negative 220 to negative 443. Okay, so I'm keeping my Vega half the size with a 111, and I still have a nice tail of 525 bucks on 7447. So again, I'm making 7% in the tail, but I'm starting it in the money here. So I'm already starting it here. So if we stay here or even drop a bit, okay, we're going to be making a lot more money here. It's almost like a jade lizard. To be a little bit closer to a jade lizard, we'd actually move these up a bit more, and this would be also an in the money 111, which is more like a jade lizard. Okay, because you've got a put spread uh, that's about, instead of having the call spread, you just have a in the money put spread financed by the out of the money naked put. Okay. And as long as the out of the money naked put is generating more cash than than these are costing, you're going to have no risk to the upside. But now let's take a look at this thing. This is pretty interesting trade. 60/50 is what? About a 9 delta. It's not bad, 9 delta. You still have a 90% chance that we're not going down this far. But look at this trade. Right? Now you're taking in $700 in the tail using $8,000. So this is going to give you 8.7% return up here. But if we stay anywhere in this thing here, you're making 1980 on 8,015. Well, now you're going to make 25% return on this thing. This is not bad. We could actually push these out potentially even more. Okay. Again, a little bit more jade lizardy, right? This is not setting up bad. Let's knock this 111 down a bit. Okay, so a little bit more jade lizardy here. And yeah, we would be right at the expected move. So if you did the jade lizard, you could sell the calls instead of the puts. I don't think it matters here on this. So if you want to change it to the call spread and actually put a true jade lizard on, but essentially the 111, 112, it is a jade lizard. It's just a matter of where you put the put debit spread. This trade, though, the at the money or in the money 111, not bad. Okay. So you're going to make 358 bucks if we rally hard and we get out of this trap. We have no risk to the upside. Okay. And if we rally hard, we're going to make almost 5% up here, which is, again, not terrible for 57 days. But if we don't rally and we just meander in this area, we go up, we go down, we chop around, we could even drop down towards 6,000 over time as long as we don't do it tomorrow, which is over a 10% correction in the market. Okay. this is not a bad trade. So I really like this setup. It's not expensive, relatively speaking, depending on your account size. And I like okay, and you can look these up in my trade plan. It is the at the money 111, but took some, um, I pushed this thing up a little bit more and I made it more Jade Lizardy, like I said, and it's an in the money instead of at the money. If you like the at the money version, though, you can absolutely play that as well. Okay, so if we did like an at the money version, this is what you would be looking like. You'd make even more in the tail up here. And if you drop down, this is not bad. So this is the at the money version. Okay, not bad. Pick your poison. Whichever one you prefer is where you should be playing it. But uh, I don't think this is bad. I think the best setup. And if you want to go narrower, like 25 wide, just play around. You want a big fat trap? You want a narrow trap? You want to make more in the tail? Okay, you're still going to make really good money in here. 2180 using $7,400. You're going to make 29%. So do you want to double it or to make, do you want to make 40% or 30%? 40%, 30%. But if you only make the 30% here, you're going to make way more in the tail up here, way more than 10%. So I actually like this version as well. If I had to pick, I'd have a hard time picking. This is like picking your children. Here, the 112 is my child. I love these things. But I think you can do anything you want with this trade. I call it the Swiss Army knife of trading. It absolutely is, in my opinion, the most flexible trading strategy that I can find anywhere because I can build almost anything out of it. As Eco said, the Swiss Army knife, 100%. It's the Swiss Army knife of trading. You can make anything you want out of this. You want more of a hedge? Do you want more of a Jade Lizard? If you're thinking that Strangle is what I like, but I'd also like to have no risk to the upside, I can turn it into one of these things and do an in the money 112. I can reduce that. I can make it narrower, wider, whatever you want to do. Okay. The world's yours when it comes to the 112, trading it in here. Based upon what you're seeing in the charts, okay, what do you want to put on? Right? So I think any of these would work. So I just gave you a 112, a BA 112, a 111 in the money, and an at the money 111, all in the exact same expiration cycle. It's just a matter of where do you put your put debit spread? Where do you put your naked put? These all have this pretty serious T+0 line heading lower. So if we fall fast, you're going to get pain on your puts. But if you do the 111 version, you've only got one naked put. I'm not worried about Volmageddon stuff in here. If it happens, it happens. I got one naked put, big deal. Okay. Uh, but so I think the 111, if you're using some of these trades, sets up really nicely and reduces your risk, and you don't have as much Vega risk on there. All right. There you go. There's a bunch of different trades. I also talked about the fact that there's a strangle opportunity on ES. So if I was going to do a strangle on ES, using up my strikes here already, I've got so many things going. Let's take a look at a strangle. So let's take a look at a strangle. Can't even fit it on the screen. Gets so enormous. Okay. How's this for a strangle on ES right now? You can't even see it. The downside, you're down at 56.75, okay, which is 1,300 points from here. Okay. Your upside's at 76.25. Doesn't mean we can't get there. Okay. But your odds are, you've got a 90% chance you're not touching either one of these. Probability of profit on this whole trade's 83% because you're going to add, the 7 and the 6 together, subtract that out, so you're in the mid 80s with it. I like this as a strangle as well. So what did I do? Right, let's copy this one. But if you like a strangle and you like a 112, then I think that's when those That's when a Jade Lizard or a at the money 111 112. I think that's when those really come into play, is when you like both of those trades on the same underlying. But I like it's well, yes, I have a PM account, but it's really not because I'm based on a PM account. Your IRA account, your buying power is your cash secured. So you're better off trading something smaller, uh, a strangle on something like, SPY or something, which is also a pretty large instrument. If I was to tweak this thing out and put it on in a Reg T account, okay, this is what it would look like in a Reg T account. Okay, same buying power, right? Okay. So it doesn't matter that I'm in a PM account or a Reg T account, really makes no difference. Okay, uh, because it's futures. Okay, but if you were to put this thing on in a IRA, okay, well now you're looking at a $12,000 um, charge for me. Okay, depends on what your broker is. You're saying 28K. I'm looking at 12K for me here on an IRA, but it's all good. But it really will be broker dependent on it. But I like this strangle. So I think this strangle is pretty nice. I'd consider doing that in here too. I got too many trades on. Some things need to come off. I don't want to overdo my ES, but I would consider the strangle because what would the strangle do for me that the other trades don't do? Well, the strangler is going to give me a pretty net, delta zero trade. Right. And although a 112, they do start out delta positive, but over time, a 112 becomes a delta negative trade, closer to when you're going to take off the naked puts. And then once you take off the naked puts, it's an absolute uh, delta negative trade. But they start off slightly delta positive, but as time goes by, a 112 becomes a delta neutral, then delta negative trade. So something to keep an eye on there when you're trading. All right, gold. We talked about gold. We have a 112 trade on. It's up 66%. I got a strangle. It's up 24% in 5 days. Those are great. And then I've got a BA 111, which is up 125%. So again, these BA 111s, these at the money one, these things can work anywhere. The Swiss Army knife of trading. So we're set on gold. We're having a good time on gold here. Up a couple grand on gold. All right, so there you go on gold. All right, let's keep working. Nicholas, what's up at PayPal? The chart is ugly. Yep, PayPal not looking too healthy in here. All right, so uh, broken down below, not hold, it's right at a support level, so it'd be interesting to see how PayPal holds up in this realm. But most likely, this naked put that we have on PayPal is probably going to go bye-byes. Um, is what it is, right? Uh, so you win some, you lose some. We've made so much on spec trades that I'm okay losing a few of these. But what's the takeaway? Don't trade stocks. Okay? Stick to the indexes and the futures, and don't trade stocks, and you're in great shape. Okay, because pretty much any of the losses that I take come from stocks, not from the standard trades. In this account, they come from spec trades, but you keep them small, right? So it's a small trade. If this thing comes off for 2x loser, I lose 2 grand on it, which is never fun, but 2 grand on this account is a 0.5%. Right? So I can give up a 0.5%. I'm fine. Okay, let's would you recommend a strangle or BA now on gold? Well, what did I say earlier? That right now it's a strangle or a 112 on gold is what I suggested when I just did the trade. So let's start with a 112. 49 days a little short, 84 days is a little long. So we don't have the perfect 112, which is 60 days. Let's look at the 49 day. I don't know. I'm not sold that that would be great, but let's take a quick look and let's keep this thing at 10 wide. And then let's look down here somewhere around 7-ish, 36.10, something like that. All right. So if I was doing if I was doing a 112, probably need to go a little wider on that thing. So this would be what a 112 would look like on gold. Trying to just get it sized so you can see a little bit better. So this would be a 112 on gold. Expensive bugger, right? So it's going to cost us $21,000 for this thing. We're going to make 1,310 bucks using 21,612. Hey, I got to jump into another meeting here, so I got to wrap up really, really fast for you. But this is going to still be a 6% trade, but you got to have some cash on you because gold expensive to trade. So let's put this one on. So this is a GC 112. All right, that trade is posted. You could make this a 111 or a BA 112. So if you want to make it a BA 112, okay, we drag down here something like this. I'd probably narrow these a bit as well. So something along this, this line. You'd have to play with it a bit. Maybe we go to 3,500 on gold, which is quite a ways from here. Another 10% drop in gold. You're making 720 bucks in the tail using 16,107, 4% return in the tail. Not great, but if you do drop into here, you're going to make 1,700 on that, which is 10%. Okay, so something to think about. And gold, um, I prefer right now. I think probably looking at a strangle on gold. So I'm going to go out 90 days. Because why? Because A, I give myself the chance that the expected move is going to be larger than the realized move, which means I'm going to get paid more than we expect for the strangle. So the farther you go on, anything that's 60 days or more, typically the realized move is less than the expected move, which gives you a better chance of being successful. But if I was putting on a strangle, look how skewed this thing is. But if it's definitely skewed to the upside. Everybody still thinks that this thing is going higher, but this is not a bad trade. Taking a 2,300 bucks on 9,000 in margin, I think that works uh, pretty well. Boom, save it. All right, last one here, and I got to run. Okay, so I'm getting through a bunch of these. I'm giving you a ton of trade ideas. All right, what else would we do? Again, our bonds trade. It's up 7% in 5 days. Perfect. I'd still do um, bond strangles. Yeah, Bitcoin's dropping. Yep. So I covered that earlier. It's all good. Uh, so what do we do here on, uh, Bitcoin's in a sell-off period right now. So you just let it shake out the people, let it rotate, and then it'll be fine. All right, gold. So this gold is up 77% in 4 days. We could absolutely roll this thing. Gold is still 8 above the 21, so we would roll at the money. So if I did a quick roll, can I roll for, let's see if can I roll for Friday? I absolutely can. So we could roll it to Friday right at the money. We're going to book $218 in credit uh, here and put ourselves right back in the mix. So we're going to do that. We're going to roll. We're going to book some cash. Okay. We're still at the money on this thing. We've got plenty of extrinsic. We've got $1,288 worth of extrinsic on gold. So there's the gold roll. IBIT, same thing. Bitcoin getting beat up. We're going to book our profits because we could care less what happens to the underlying, right? But we're going to book $2,000 in 5 days. I will take it. We're going to roll it. Now, as we're rolling this one, and I think we can roll to the same expiration here, but I'm going to roll in the money on this one. because we have the 8 below the 21. So we're going to roll in the money down around the expected move or so. And we're still going to get a credit rolling for this Friday, rolling in the money, giving us some downside protection. Okay. So we'll put this on. If you count to 30, this trade will fire. Right? So we'll see what happens. Strategy, we're at 58%. Too much extrinsic left. No sense rolling that one. It's in perfect shape. Nothing to do here on strategy. Loving that trade. AVGO, we're at 75% on this one. We could roll the AVGO trade as well. So we can book some cash here. Let's roll for the same piece. We're going to go right at the money. We're going to book a nice credit. We're going to keep it right at the money. We'll see if we get filled. If not, we'll adjust those as needed. SPY, this one's at 74%. We could also roll the SPY as well. Okay, there's IBIT. I told you to count to 30. If you counted to 30, it's filled in 30 seconds, which is exactly what happens every single time. All right, we can roll this one on SPY, so we can book some cash on SPY as well. Okay, and then QQQ is also at 80%, so we're going to roll that puppy as well. We'll roll it for the same expiration. We'll roll it down in the money, or right to close to at the money. I don't want to go in the money on it, since we've got to go at the money, and I don't want to get whipsawed too bad, so we'll just go one strike above, but this will be fine. All right, so there you go. A bunch of rolls. Everything is good. Nothing to do here. PayPal, it's losing. Home builders losing a couple $100. I'm not worried about those. Bulls down as well. So any stock trades are down. This NNE small trade, it's down. Nothing to touch. Everything is good. Rock and roll on, folks. We'll see you guys in the Discord. Hope this was helpful to you. We'll see you later.